Congress. Well, you must have heard of the Mobile World Congress in Shanghai or Barcelona, but this one is special because it's right here in Pragati Maidan in New Delhi. We've been here all day and we've been tracking all the top updates and developments from the world of telecom and technology. I want to get you all those conversations on the show.
Well, Ayush will be waiting for that, but meanwhile, here are the top headlines of the day. Indian markets fall for the 7th consecutive day, making it the longest losing streak of the year. Rupee closes at a fresh 6-month low as foreign investors continue to pull money out of Indian securities. Rajiv Kumar says fiscal stimulus is unavoidable if the government wants to revive growth. The Niti Aayog Vice Chairman adds that India won't be punished if fiscal deficit rises. Piramal Finance forays into the housing finance space. Group's Chairman Ajay Piramal says the main target audience will be self-employed people. Former Finance Minister and senior BJP leader Yashwant Sinha says economy is in a downward spiral and is poised for a hard landing. Donald Trump is set to unveil his ambitious tax plan. Corporate tax rates are likely to be slashed to 20%. Rates for highest earning individuals may be capped at 35%. Well, the big story today, Indian markets posted their 7th day of losses in a row. This is the longest losing streak in Indian markets this year. Both the Nifty and Sensex lost over a percentage, with Nifty breaching the psychological 9,800 mark. The losses were spread out across the sectors, with only IT ending flat. Neeraj Shah is with me now to make sense of this sell-off and Dalal Street. Hi, Neeraj. Why this kind of a sell-off in a relatively calm global scenario?
Yeah, it's difficult to think as to what is the exact reason for this, because the rest of the global markets in today's session were okay, and we had a fairly calm day yesterday as well. So one was hoping that leading into the expiry tomorrow, we would actually have a day in the green, or at least we'll not have such a deep day in the red. One could probably only fathom think of one key reason why this is happening, and that's because of concerns on growth. Clearly, that seems to be the buzzword around, that whether the GDP growth can come back in a hurry, and even if that takes a bit of a time or a bit of a lag, will the earnings growth, which was first envisaged at 18%, then scaled down to 15% by a bunch of people, will it be scaled down to lower single digits? And will this actually percolate into FY19 assumptions as well, being scaled down? Already we've heard murmurings of FY19 growth, which was earlier envisaged at 20%, being scaled down by 3 to 4 percentage points. These are not good signs. This is not what the market really likes, because eventually you need earnings for the PE multiple itself to sustain and a higher PE value to be assigned to this market. If both of these come into question mark, then you are in for tough times, and I think that is what the market seems to be worried about at this point of time.
What about inflows? What foreign inflows? Are you looking at that receding? Would that dampen sentiments further? Is that an issue at all? So,
a couple of interesting things out here, Tamanna. One, that while we've had outflows on the FI side from our markets, I think quarter to date, about 2.3 billion as per the Bloomberg terminal. That is probably in line with some of the other Asian markets, the likes of Indonesia, for example, have had similar ones. Taiwan has seen, South Korea, but you could anticipate why South Korea could have had. Yeah. But Taiwan, Indonesia, and a few others have had similar flows. But the DI flows have been supportive. The only thing out here is that while the DI flows are still largely equity flows, the common comment coming in from across the mutual fund advisory team and fund managers is to asking people to invest in balanced funds. And therefore, the mutual fund money, which has been holding the market and giving it a bit of shore, might start investing into debt and otherwise, and that might just remove the leg which the market has right now to sustain the FI outflow, because that is continuing, but the DI inflow is compensating. If that stops, then one, yes, it's a classic chicken and egg situation. Yeah. You don't know what will lead to the other, but we could be in for a bit of a spiral. No alarm bells as yet. Hopefully this improves before it worsens. But for now, just speaking to almost everybody on the street, it does seem to be a bit of a tough time that we are in right now.
What immediate triggers on the horizon? Festive season sometimes ends up being a bit of a boost. Any real events that the market is looking at?
So I think the October earnings season, or rather the September quarter earnings season coming out in October, which most people are now believing is going to be a damp squib because of GST, if there is a positive surprise, and if not in delivery, then in commentary, that will be taken very well. Until now, we just have some of these auto names saying that there are good things. The brief respite, if you will, is that commercial vehicle output or sales has improved, and that typically serves as a lead indicator. One would be hoping as hell that that does come about, and the October delivery or the commentary, either of the two or both preferably, is positive because that could lift sentiment.
Well, thanks so much for that, Neeraj. Now, the Indian rupee closed at a fresh 6-month low of 65.71 against the US dollar. Foreign investors continue to pull money out of Indian securities on the back of concerns over Indian government overshooting its fiscal deficit target for this year. Rising geopolitical tensions between the US and North Korea also added to investors' fears. The rupee has now lost nearly 2.2% over the last 6 trading sessions. Fiscal stimulus is inevitable to revive the economy. That's the word coming from Niti Aayog Vice Chairman Rajiv Kumar. Speaking to Bloomberg Quint's contributing editor Praveen Chakravarti, Kumar said that it is wrong to blame interest rates alone for the slowdown of the economy. Here's a slice of that conversation.
You know that any good, efficient policy meant for reviving the economy has to walk on 2 legs.
Sure.
It has to be both monetary and fiscal.
Sure.
And this whole, in my view, nonsense of this against the other, and this is one, is just that much. So therefore there is a time now for the Mint Road and North Block to work together, work closely together and in tandem, and figure out what is needed to be done, so that on the one hand, there is a better transmission of the interest rate cut, there is a greater supply response, and there is, the fiscal, and they are in sync, as it were, and rather than working against each other.
So independence of the central bank is some la-la land concept, according to you?
Independent, but independent, of course. I mean, but working in close coordination, that can be achieved.
Okay.
I mean, even if you're independent. I mean, why should it be that if you're independent, then you mean you have to be in opposition?
The fact is, government spending has been growing at 2.5 times nominal figures, the nominal GDP. It is already, some would argue, that we were already on a stimulus package, right? With oil where it is, and government spending being extraordinarily high. And as you know, at least in the first 4 months, we are already at 92% of the targeted deficit. How much more can the government spend?
Well, what I noticed was that the government expenditure the growth in government expenditure has slowed down from previous year, last year, this year. I mean, I think it was 16.2 and 9.8 this year.
On a real basis?
On a real basis. So that's gone down. So that's one part of it. The second part of it is that I don't want to give a number, but I do want to say, and I emphasized this earlier, that the FRBM, the fiscal target, is a self-imposed punishment on yourself, and you want to tie yourself hand and foot for this, because I've insisted even to the NK Singh committee that you should focus much more on the revenue deficit than on the fiscal deficit, because if you are going to use your borrowing for capital investment and for productivity enhancing investment, I cannot see anybody objecting to that. Now the question that you asked, which is a very valid one, as to how much more. I mean, you outlined something yourself, which is recapitalization, which are some very large infrastructure projects. Then there's low-cost housing. If you do those, and then you see, and then there'll be some roads and highways. If you're going to do that, then of course
it's inevitable.
Inevitable, and you come up with whatever number you come up.
Stimulus is somewhat inevitable to boost spending, right?
Pretty much so. And in that sense, the sooner we can do it, the better, because but let me put it like this: that we've discussed all the measures that are needed for that. You may give it the name whatever you like, but the fact is that those steps, those measures need money, but they need to be taken. And then it's up to you to see whether they may not necessarily increase the fiscal deficit if you're smart enough, but if they do, you will have to make sure that your revenue deficit doesn't increase. And if the fiscal deficit increase, I do not think that people will punish you for that.
And you can catch that full interview at 9 p.m. only on Bloomberg Quint Live. Now, Deve's laboratory regulatory troubles may take a turn for the worse. At least 3 of the 6 observations in US FDA's Form 483 do not appear to be procedural in nature. Darshan Mehta, who accessed a copy of the observations against Deve's Visakhapatnam Unit 2 facility, filed this report.
So indeed, it was a bitter pill for Deve's lab today. The counter fell almost 11%. So what has happened is the fact that the US FDA made public the Form 483, which was awarded to its Vizag Unit 2. Now, there were 3 repeat observations and 3 data integrity issues. We'll take you through all of them. Now, the first observation said that the company failed to test individual batches. So that means the APIs were not tested and they were actually directly exported out of the plant. So that's a big concern. The observation is serious because we believe that we are surprised that the FDA has actually not recommended that these products be recalled. So the first observation is serious for Deve's lab. The second observation actually talks about lab failure thoroughly to investigate some of the data that was there. Now this is a repeat observation. This happened last time around, and this is this actually points to a little bit of data integrity. So this observation is also serious. The third observation that is there actually speaks about that, the sample testing that they had done actually did not relate, and the results of the sample testing were not with what was there actually there. So this also actually is a repeat observation, and it's rather serious and actually points to data integrity issues. Now the fourth observation that is there, no documentation to ensure cleaning procedures are effective. This is also a repeat observation for Deve's lab. This raises cross-contamination concerns because of what is going on in the plant. The fifth observation is a minor issue. They said that it does not have adequate cleaning instruction for major equipment. It is a new observation, but it's procedural in nature and also minor, so not too much important. And finally, the last one, which is also very important, batch records are not recorded at the time of completion of the observation. So this is basically data falsification. A lot of these other companies which have done this actually have had problems because of this. This said this is similar to other companies, and basically what they're doing is they are actually, without conducting any kind of experiment, they are actually signing off the data. So this is actually data falsification. So as you saw, 3 of them were repeat observations and 3 of them actually pointing to data integrity issues, and clearly that spooked the street, and the counter was down almost 11% in today's trade.
Now, the inaugural India Mobile Congress kicked off today with a who's who of the Indian telecom industry in attendance. Even as the government moves ahead with its Digital India push, the telecom industry says it cannot achieve the government's aim by itself. Speaking at the event, RIL chairman Mukesh Ambani said no single entity can achieve India's digital dream. Sunil Mittal echoed Ambani's sentiment. The Bharti chairman said the government must roll out a red carpet for investments into the sector if India's digital potential is to be met. Mittal also outlined plans to spend 20,000 crore rupees to ramp up Airtel's digital infrastructure.
We have to invest in building next generation technology assets. We have to root out inefficiencies across the digital ecosystem, and we must break silos and forge partnerships. No single corporate nor the government can do it alone. Together, we can achieve the unimaginable.
We will need your support to ensure that while we are rolling out these large networks, we do get red carpet treatment. And like you, sir, the state governments, the municipalities, local governments must understand the power of Digital India. And they must come out all in support of what we are trying to do. There's generally an acquisition on the Indian industry for the last 2 or 3 years that we don't invest enough. And partially, I would concede you're right. But this industry in particular is doing a yeoman service in investments. So overall, 60,000 crores just in 1 year is going into building hard digital infrastructure. BSNL is doing its own lot, and there are many other smaller operators who are also trying to contribute towards this investment. Government policies which can enable these investments to be put onto the ground faster will greatly enable us to reach the vision that you have and our Prime Minister has in a faster and more impressive manner.
Now, Petroleum Minister Dharmendra Pradhan, who was also at the conference, put forward a rather novel proposition at the Indian Mobile Conference in Congress in New Delhi today. He said very soon every petroleum product will be available on e-commerce platforms. Pradhan said permissions have already been obtained for the proposal. He also said that the move is aimed at winding down long queues at fuel stations and to use home delivery for pushing forward digital transactions post demonetization.
हम सारे पेट्रोलियम प्रोडक्ट को ई कॉमर्स की प्लेटफॉर्म पे रखेंगे। मैंने कुछ दिन पहले कहा था कि हम डोर स्टेप डिलीवरी करेंगे पेट्रोल और डीजल को।
Now, former chairman and managing director of BPCL, R.K. Singh, is joining us on the phone line. Mr. Singh, thank you so much for speaking with Bloomberg Quint. And, you know, it just sounds like a very novel idea. First question that comes to mind is feasibility. Is selling fuel on e-commerce platforms, like people buy phones, etc. now, you'll buy fuel. And the second is home delivery. Can it work?
It can. E-commerce part, of course, it is quite feasible. And as far as doorstep delivery is concerned, you know, it can work. Let me tell you, let me give an example. When I was heading LPG division in Bharat Petroleum, we had introduced rural mobile marketing vehicle, which its function was to go to various places in rural India, and customers can come with their cylinders and get it filled up, and the mobile vehicle can move from place to place, and it was carrying a tank and a filling machine. So that kind of thing has already been experimented in India. Likewise, petrol and diesel, of course, it will have to be, the dispensing pump will have to be mounted on a vehicle, and vehicle can go to various locations. But the problem area that needs to be addressed is that when you dispense petrol in a vehicle, some vapor is likely to come out. It does come out, and therefore the area has to be cordoned off, and so that there is no safety hazard involved. But it is quite possible to do it. Let me tell you first that.
That's very interesting, and you know, you describe how there will be a mobile sort of vehicle which will dispense, because the first thing that comes to mind is, of course, it's illegal to have petrol in bottles or canisters, and that's definitely not something we're looking at, is it?
It is illegal, of course it is illegal, but I don't think what Minister is suggesting, but the vehicle goes from place to place. It will certainly carry a tank to store the petrol, and it will have a dispensing pump attached to this. So the petrol will have to be dispensed in the car tank, not in the can. As of now, the dispensing of petrol in can, carrying it is not allowed by Explosive Department. So what I presume is that Minister is talking about a mobile vehicle which will be mounted with tank as well as dispensing pump, and the dispensing will be done the same way as it is done at the petrol pump. In the car tank.
Yeah, that makes much more sense, definitely, and one can presume that's the plan. Just one more question. On a retail level, there would, I'm assuming, would be or will have to be some kind of a premium for this home delivery of fuel?
I don't know that part. Through what I heard from your brief talk by the minister, I think he's talking about e-commerce. So now there will be some kind of competition between the retailers, and whether there will be premium or discount, I won't know that part of it, but certainly it will enhance the competition, and even petrol pump fellow will feel threatened. So let's see how it plays out, but at the moment I can't talk about discount and the premium.
All right. Thank you so much, Mr. Singh, for speaking with us. That was the former chairman of BPCL saying that, yes, it is very much doable, not as out of the box as it may seem, and maybe it would be a reality in the near future. Now, time to get you all the other action from the Indian Mobile Congress, where Nokia is looking to make a comeback into the Indian markets. Ayush caught up with Ajay Mehta, the India head at HMD Global, which holds the rights for Nokia's brand name, to get a sneak peek into Nokia's latest offering.
Hi Ajay, thanks for joining us on Bloomberg Quint.
Pleasure. Absolute pleasure.
All right, as you guys can see, we're clearly shooting on a Nokia 8. Now, Ajay, what y'all are coining this one as a bothi.
Yes.
So,
Be less selfie, be more bothi.
Be more bothi. Do you think this is a trend that will catch on?
Well, absolutely. We believe it is because it kind of tells you both sides of the story.
Right.
When you take a selfie, it tells you one side of the story. The bothi tells you both sides of the story.
So what's interesting is, Ajay, that, you know, there's two reasons that, well, Nokia and HMB Global have really grabbed the headlines this year. One being this bothi. And if this catches on, I want to go down in history as someone who did the first bothi interview with Ajay, right?
Yes, absolutely.
And even in the event that it doesn't catch on, well, there's still something that has made all of us really nostalgic and happy, which was the Nokia 3310. We got this on Bloomberg Quint to you, well, right at the start, and it's a lot of fun. There's a big element of nostalgia. It's been very popular. There's been a...
But the interesting, Ayush, has been that it's not just been bought by the old Nokia fans.
Yeah.
This has been bought even by the millennials of today.
I know.
So like I mentioned to you, the first time this was announced, my niece, 18-year-old niece, gave me a call and said she didn't want one, she wanted 20.
Right.
Of course, I couldn't send her that many. But whatever, it was it evoked interest across the board, across all age groups. So it's an interesting phenomenon.
No, it's interesting, Ajay. What I wanted to ask you was also from what you're trying to do at HMD Global. It's an interesting proposition, getting the Nokia rights. What has it been like, considering India is key? It's an imperative market for you guys. What's it been like coming up with products really tailor-made for the Indian market?
Yeah. So it's been a very, very exciting journey, to say the least. We are just 8 months into our company. We started on the 1st of December. And in 8 months, what we've been doing is essentially getting the asset base together. So we have a distribution network of 450 exclusive distributors covering 90,000 outlets.
Right.
That was the first one. The second one was the whole manufacturing piece. So we've partnered with Foxconn, and they've made their factory down in TN and AP, and now they're expanding.
So it's all made in India?
So every phone that's sold in India is made in India. Okay. That's been our philosophy from the start.
Now, even as the government gets ready with its 5G push in India, there is some concern as to where the network infrastructure will come from and whether it's ready. Ayush caught up with Larry Paulson of Qualcomm, one of the biggest telecommunications equipment makers in the world, to understand if India is indeed ready to take the leap to 5G.
It's a fairly complex situation. There are a number of factors that have to happen. One, the standards themselves are still in final shaping, the Release 15 and Release 16. Two, you have to have a regulatory situation to go through the spectrum.
Absolutely.
And spectrum and allocation. The spectrum's available and ready in India, and then spectrum's a very valuable possession of the people, right? It belongs to the people. It's a government asset.
Right.
So how that rolls out is not simple.
Absolutely.
Right? And then you combine that with where we are right now and still, if you will, populating. This is one of the few places, a major market in the world, that is still really going through what I call a double transition.
Right.
It's transitioning from 2G/3G to 4G, and it's also transitioning from feature phone to smartphone.
That's right.
From a readiness perspective, I think that there's a lot of energy in India, and there are challenges between now and then that just simply have to be sorted out. The challenges were well documented this morning in the core sessions. There's nothing I can bring you that's insight on those challenges. You know what they are, right?
Absolutely.
You have to get the standards set, you have to get the spectrum policy agreed,
That's right.
you have to get the investment portfolios aligned, which means ROI is going to come under scrutiny, and so forth and so on. I don't see any reason why those things will not get worked out.
Right.
But it's a little too early sitting here at the end of the third quarter of 2017 to actually predict and project without some answers to those issues. Predict and project.
Well, the issue of interconnect user charges or IUC has been a bone of contention between incumbent telecom operators like Bharti Airtel, led by Sunil Mittal, and new player Reliance Jio, led by Mukesh Ambani. And that's another interesting aspect of what happened at the Indian Mobile Congress today. Because while the two may be rivals in the field of business, off it, the business leaders displayed some camaraderie, and that was visible today.
My colleagues, my dear friend Mukesh Ambani,
my good friend from the industry, Sunil Mittal.
And as was pointed out by Secretary earlier and Mukesh, I think India's time has clearly come. Clearly, as Mukesh pointed out, none of us can do it alone. We all have to come together. I hope, together with friends like Mukesh, we will build something for the future.
Sir, as long as you and Mr. Ambani continue to refer to yourselves as friends, I think the industry is okay, sir.
Well, one new friendship blossoming there, but the big political story today has really old relationships going sour very publicly. On the national front, Yashwant Sinha of the BJP, former finance minister in the NDA government, today spoke up on the economic mess created by Finance Minister Arun Jaitley. He has called it a mess in his opinion piece, actually published in the Indian Express today. Sinha goes all out on the government's policy of what he says is instilling fear, calling it their new game. He articulated how the economy, according to him, was in a downward spiral, and many in the BJP dare not say it out loud, calling it his national duty to speak up now. He says that demonetization and GST only added fuel to the fire. Now, taking cue from Yashwant Sinha, former finance minister and Congress leader P. Chidambaram slammed the centre for its economic policies as well.
He's spot on when he says that the BJP NDA government got an unprecedented oil bonanza that was wasted, that private investment has shrunk as never before in 2 decades, that industrial production is all but collapsed, that exports have dwindled, that demonetization has proved to be an unmitigated disaster. I think all the indicators show that growth in July, August, September quarter, second quarter of this year, will be below 6%.
And we will talk about Yashwant Sinha's comments and the political furor which has come about. Also, what is the message coming through? Should the government sit up and take notice? Joining us on that conversation will be Rajiv Chandrasekhar, member of the Rajya Sabha from the NDA, Manish Tiwari, Congress leader and former Union Minister, as well as Sadanand Dume, resident fellow at the American Enterprise Institute. That conversation is coming up in just a bit from now on Primetime Debate, so stay tuned for that. Are we live?